Hello, and welcome to the Liquid Introduction webinar. I think we have the attendees with us. This is our first time using this webinar platform, so there may be a few teething issues. Anyway, my name is Neil. I head up a lot of the marketing work that we do at Blockstream, and we also have on the call Alan Piscitello, who is Director of Product, and Daniel Williams, who's Community Manager. So this webinar was intended for participants of the Bitcoin 2019 hackathon. However, if we have some other people that are just interested in the Liquid platform on the webinar as well, that's fine. If you've got any questions, we'll be very happy to help answer those. Yeah. So in terms of the hackathon, just a quick introduction for people that are perhaps not completely familiar with what we're doing there. The hackathon submissions need to be in before June the 9th, so time's pretty short, and it's just a chance for the community to build some interesting applications on top of Liquid. We're not looking for any applications in particular. We're really interested to see what people come up with. And the submissions are going to be judged by three of our judges, Samson Mao, Lawrence Nahum, and Andrew Poelstra. Alan's not going to be judging any of the submissions. He's just going to be mentoring people in the week, in the following week, coming up to the submission date. Yeah, and the first prize, $3,500 paid in Bitcoin, plus $1,500 worth of travel costs to attend the Bitcoin 2019 event. Plus, we'll be providing continued mentorship after the event has ended for anybody that wants to try and commercialize their project further. And then we also have a second prize of $1,500 paid in Bitcoin for the runners-up. So if anybody wants any more information on the hackathon, we've got a lot more details. I think the best place to go is our website, our blog, and I'm posting a link on the public chat right now. And with that, I'll hand over to Alan, who will give you guys an introduction to the Liquid platform.
All right, thanks, Neil. Yeah, so as Neil mentioned, I'm the Director of Product at Blockstream. So my role is to help build and guide the roadmaps of a lot of the products Blockstream is working on. So that includes things like Liquid, but also other projects that we're building. You may have heard the announcement of a product called Liquid Securities that we made at Consensus. Also, we have Blockstream Green, which is our non-custodial multi-signature wallet. And other projects as well. We're working on a lot of things with the Lightning Network. And one of the things also is something called Elements, and that's going to come into a little bit of this demo as well. There's a lot of confusion and questions about what's the difference between Elements and Liquid. So we'll dive into that as well when we go through it. All right.
Sorry to interrupt, Alan. One thing I forgot to mention: we have a Q&A section on the webinar tool. If anybody's got any questions that come up while Alan's explaining Liquid, definitely drop the questions in there. And if anybody likes the look of some of those questions, upvote them. And Alan will be running through those questions at the end of the presentation.
Excellent. Thanks, Neil. Yeah, so the agenda, what we're going to do is we're going to give a very basic overview of Liquid and explain it and how it works, but also give you the opportunity to do a hands-on set of exercises with it as well. So you can do that during the webinar and ask questions as you want. You can also feel free to do it on your own. Everything is available publicly. So that's what we'll cover on the next slide here. These links are in the chat as well. So if you go under the chat, you may have to go under presenter to see them. And you should be able to see the links to the elements/liquid binaries and the exercises as well. So first thing I want to talk about is what is Liquid and how does it relate to elements? Because there's, why are we telling you to go to elements when it's Liquid? And really the way this works is what we did was we took the Bitcoin source code and we added a bunch of other features to it. We'll talk about those in more detail, but some of those features are the ability to do a side chain, the ability to issue assets, confidential transactions. We actually added segregated witness, which is something that is now in Bitcoin, but was actually first in Elements. So there's a bunch of these features that are in Elements, and that is our open source blockchain platform. So anyone can go use Elements today, and you could make your own liquid-like federation. You could do something that's not even a side chain, that's a different blockchain. So there's a lot of things you can do with Elements. But one of the things you can do, and what we did was we built the Liquid Network. So the Liquid Network is a side chain of Bitcoin, which means that you can move Bitcoin into this network. You can then do things with that Bitcoin differently than you would be able to do on the Bitcoin network, and then at some point move that back out to the Bitcoin network. So some of the things we can do differently in Liquid that we couldn't do in Bitcoin is the idea that you can have 1 minute signed blocks. So the idea of that is in Bitcoin, mining is always probabilistic. You could always get a block in the next second, or it might take an hour to get another block. You really have no idea. So that causes a lot of unreliability in the network. And that's great for Bitcoin because now it means anonymous miners can join and leave the network at any point in time. It means that there's a massive amount of security that is all based on proof of work, and you have different sets of trade-offs with Bitcoin doing that versus Liquid. Liquid, on the other hand, uses a set of functionaries. And what these are businesses that are using the Liquid network that have an incentive to keep it running because they're actually using the Liquid network. And they tend to be make up of exchanges, financial institutions, and large institutional traders that are using Liquid for different purposes. So the other part that Liquid does differently is something called confidential transactions. And with Bitcoin, everything is very public. So when I send a transaction, I can see exactly the amounts going to different places. And what that does is that actually gives up a lot of information to the public that could potentially be used against you. So if you're doing a lot of trading, when you move funds to an exchange, you can now see exactly how much they're moving and which exchange they're moving it to, and you could potentially trade against the advantage of the person who's going to do that deposit. So if someone's depositing a large sum of Bitcoin, I might know that they're probably going to sell it. I might sell my Bitcoin on that exchange first, waiting for them to sell and then buy it back up cheaper. So this is something where the trader could lose money from it. It also harms your privacy as well. So if let's just say I had a large sum of Bitcoin and I wanted to pay Neil. If I sent Neil that Bitcoin, he could see that I was paying him out of a very large UTXO, and that gives up a lot of information. And potentially, I could become a target, if someone wanted to do me harm. So this is something where privacy is very important on the Liquid blockchain and meant to be, a very important feature. And then the other part is you can also issue other assets besides Liquid Bitcoin. So we can do something where you could issue an asset that maybe represents $1 in a bank. You could issue a corporate bond. You could issue a digital collectible. One of the things we did at Magical Crypto Conference was each of the characters in the Magical Crypto Friends issued 2,000 tokens. I think it was 500 each, one for each of the or 500 for each of the characters, and it was all the private key was put on a commemorative coin, which could then be moved around and validated on the Liquid blockchain. So you could peel the key and spend it on the Liquid blockchain as well. So there's a lot of applications here. This is definitely something we've got a lot of interest in Liquid. The trading applications, I think, are fairly straightforward. You want to move Bitcoin very quickly between exchanges. You don't want to have to wait for mining confirmations, and you want to do it privately. But the assets part really opens a whole other part where you can get a lot of the advantages of a blockchain, where you can have things being able to be validated, that it actually is authentic, it is correct, and you can actually do some really powerful things, and we'll get to that later. All right, and if you have any questions, feel free to jump that inside of the chat as well, and we can see if it's going through there. So, all right, so I'm going to dig into a lot of the nuts and bolts of Liquid and how it works. And unless you're creating your own federation, this is something that you probably won't need to do, but maybe this is interesting to you, and really just kind of understanding the security model of Liquid, what it's capable of doing, and what it's not capable of doing is kind of the first step. So Liquid operates on a two-way peg. This means that Bitcoin can go into this network and Bitcoin can go out. And the way we do this is we have a template script which is basically the control of the federation. So the functionaries are basically managing this big 11 of 15 multi-signature wallet. And as long as they're operating normally, everything looks good. So I'm not sure how familiar everyone is in this webinar with Bitcoin scripting, but Liquid scripting is based on Bitcoin scripting. There are some extra operations that we do have that in Liquid that Bitcoin doesn't have. But the idea here is what this is saying is it's going to say you need 11 out of 15 of these keys, check multi-sig, or you need to wait 4,032 blocks from the time that this transaction was posted. That's what the up CSV means. And you need 2 out of 3 of the backup keys. So the reason we do this is Liquid has 11 of 15 functionaries required to operate the network. And what we do is the functionaries are distributed around the world in different regions and different countries. And because they are centrally operated by the exchanges or the financial institutions, there's always the possibility one could stop operating, and maybe they lose their backup. But we're redundant. We can handle up to 4 going down. But we do want to have an emergency situation where, in case, let's just say, half of the Liquid network stopped operating, that all that Bitcoin that was on the network wasn't lost forever. And so that's where we have these emergency keys. And these emergency keys are only intended to be used, if the network goes down for a long period of time. And what happens is the Liquid network is continually spending these transactions to make sure they don't expire. So there's basically a sweeping function inside of the Liquid network. So I'm going to jump into one other concept we have here. So the also has the idea of block signing. So we don't have mining. We have keys that are defined at the launch of the Liquid network run by the functionaries. And what they do is they can use the API if they wanted to. And we actually have some advanced exercises we probably won't have time for in this, but feel free to go through those on your own. You can make your own block signing federation. And so what they do is, you need to have, there's a script that's defined for the blockchain. And what it is, and this is a sample one. In the Liquid example, it's 11 of 15. But this one, you have a 2 of 2 federation that's basically creating blocks. And what this means is, in Bitcoin, you have to make sure that the hash of the block is below a certain value. And that's done just through trial and error of iterating trillions and times per second on your mining rig. With Liquid, it's much less costly because you're just signing something and every client can validate that the signatures match and they're valid. And so that's useful for, if you're creating something that's blocked, very reliable. We can do this every minute. We don't have to wait to get lucky mining. It is a different security model. It just does mean that the federation itself needs to have an incentive to only sign one block. Of course, if they did sign more than one blocks and publish those in any way, you could see that they did break that kind of trust violation, and there's mechanisms to deal with that if in the event that did actually happen. All right, so how do we actually move Bitcoin into the network? And this is actually a pretty neat trick. And what this is the people who are sending money into the Bitcoin network will call an API, and actually there's some advanced examples on here where you can set up your own peg from a reg test network if you wanted to. And what they do is they take those keys that were back 2 slides ago and modify them in a certain way. What you do to modify that is you take a script pub key of the LBTC that you wish to have put in your wallet. So basically, you can think of it as your address, and you can modify the federation's public keys by that input or by that hash. And one of the nice properties of the elliptic key cryptography is that if you have the public key if you have the private key for the public key A, and you modify A by a certain way, you also have the private key for that as well, for that A prime. And the thing is, there's almost infinite numbers of ways you could modify that key. And so since it is a 256-bit number, So you want to make sure that the Federation doesn't even know it's getting paid in this case. So basically, you're sending some funds on Bitcoin to an address that the Federation doesn't even know is under its control. And you do so in a way that commits to the address that you want to receive the funds. So the example I like to use on this is, let's just imagine you had a 1,000-acre property out in the middle of the wilderness. There's no one around, there's no cameras. And while no one's there, you go and bury a gold bar somewhere on that property. And one of the nice things is I can bury it, I can leave, and no one knows I put it there. Now this gold bar is now on the owner of this property's land. And I can go to the owner of the land and I can mail them a map and says, go exactly to this spot, dig 3 feet down, and you'll find a gold bar. And by sending him that map, it's a pretty good proof that I'm the one who actually buried that gold bar there. And so that's something that's pretty interesting. You could also have it on the gold bar, a little name tag of saying whose it is as well. But this is basically a way to commit to that you have the ownership. The Federation has no idea. And so what happens is you send this on the Bitcoin network. Miners have no idea this is going to Liquid. The Federation has no idea it's going to them. And then after 100 blocks have been created on Bitcoin, you actually can claim this on the Liquid network. And you claim this by showing them how you modified their keys. And you can also prove that basically that you can put this now Liquid Bitcoin in your wallet. So that's the short explanation of the two-way peg and how it works. All right, confidential transactions. I'm not going to get too deep in the math here. It's a little bit above my understanding, but the basic idea is you're committing the value of an output without revealing what the output is. And so what you can do is you can get this commitment value, which is based on a blinding factor and the data you're actually trying to commit. And anyone can actually validate that adding 2 of these commitments up equal adding 2 of another commitments up, so that the sums of the inputs equal the outputs. So this is just something this is a natural property of how these Pedersen commitments are actually made. All right, so we're going to do a quick exercise here, and I'm going to share my screen here. And unfortunately, just the way this shares, I may need to kind of switch between applications a few times. If you did have time to download those binaries, they are available for Linux and Mac and Windows. Depending on what environment you're in, they may be called Elements, they may be called Liquid. And the idea is Elements is general purpose. It can run any of these chains, and it will actually go and you can run it in a chain mode that says Liquid V1, which is the Liquid version that's launched. You can also run it in another thing called Elements Reg Test, which is the regression test network. Basically, you don't need to sign anything. It just kind of lets you generate blocks at will. If you've used Bitcoin, Reg Test mode, it's pretty similar to that, but it's called Elements Reg Test, and you pass it with the chain parameters. And if you're looking at the Liquid walkthrough, you can do this by adding things to a configuration file if you want. That's probably the easiest way to do that. And one of the parameters in here as well is setting the initial free coins, and it's equal to this very large number here. I think it's 100, or it's 1 billion or something like that. And those are in Satoshis, so I'm basically ending up with 10 free Liquid Bitcoin. Obviously, it's not real Liquid Bitcoin. I can't do anything with it, but if you've done that step, and hopefully you all can see my screen, the idea here is you can now see, and I'll shrink it down. I think it might be hard to see, but let me shrink it down and see if you can actually see this window here. We have 10 Liquid Bitcoin here. None of it's pending. It's all in my wallet. And the reason it is, it's considered anyone can spend. We call it initial free coins. So if you go in here, you can actually go to the debug window, and I don't think it showed you what I'm selecting here. I'm looking at the screen here, but if you select debug window, this lets you call commands, and there's lots of ways these RPC commands can be called. You can call them from the command line. And there's usually language adapters for pretty much everything under the sun, from Python to .NET to Node.js. Pretty much anything you think of, there's some adapter for Bitcoin RPCs. And so, nice thing about being based on Bitcoin is a lot of these things are almost exactly the same, and a lot of the APIs and methods you use, if you've used done any Bitcoin programming, it's going to seem very familiar to you, with the exception of a couple things with like blinding and also with assets. So I'm going to switch my screen here to another window, which is the debug window. And all right, everyone can see it now. So now it says it's the Elements Core RPC console, and we can go in here and I can start calling commands just like I would if I'm programming it. So I'd say get balance, and it says I have 10 Bitcoin. Okay, that's pretty cool. Get block count. There's been one block. I created one beforehand. It would have been 0, but if I want to create another block, I can say generate 1. If I want to create 10 blocks, I can generate 10. I can see now there's been 12 blocks. So now we've started up elements, and we've been able to run this. We're able to do some very basic operations in here. I see a question in here in the chat. Yeah, if you go to the presenter tech tab, and I don't know if yours looks the same as mine, I'm going to post it in here. Here's the link to the binaries here that you can run and follow along with me, or do it on your own. So this is just showing us the very basics here, and I'm going to stop, and then we're going to start getting into a couple of other exercises here. So let me open this up. All right. Neil, if you can just confirm everything's looking good, you can still see everything and everything's coming along. You can still hear me?
Yes, sound has been perfect. Video, everything's working. Just
awesome.
Some teething issues with the Q&A, but that seems to have resolved itself.
Perfect. All righty. So now what we're going to do now is kind of talk a little bit more detail about confidential transactions. And one of the things I mentioned is it's very easy to prove that A plus B equals C, or C plus D. And the problem with that is, that's easy to do, but there's actually a way to cheat in the system. So let's just say we had a confidential transaction where we had X liquid Bitcoin. We could create an output that was actually bigger than X. So we're receiving more coins than we're spending, and it would still validate. And so let's just pretend here we have the first input, which is X liquid Bitcoin. That's what we're spending. We have a second output, which is a larger amount. And we have the second output, which is actually the difference between the two. We know that X equals X plus Y minus Y. That's just basic algebra there. And what we would do is we would just take this negative Bitcoin output that we have and just throw it in the trash, pretend it doesn't exist, and now we've just given ourselves free Bitcoin. And that obviously would not be suitable for any kind of system with real money. So we need a way to kind of prove that we're not creating money out of thin air in this. And so how do we do that? So we can prove that each output is non-negative. If it's 0 or above 0, then we know we haven't created any money out of thin air. So again, we'll use that same thing. Let's just pretend that X plus Y is in here. We have the negative Y for the output 2. And if 2 and 1 are both positive, then Y must be negative, and that means we didn't actually create any money out of thin air. So what we do is, we have this range proof, and we actually go through each output, and we can create a zero-knowledge proof without revealing what the output is, but we can actually prove that it is above 0 and within a certain range. So basically 0 to, I think it's something around 600 Bitcoin. It might be 300 Bitcoin. It's a pretty large number. So you can move all those around, and you can prove it somewhere in there, but you don't have to necessarily say which number that is. So that's kind of a really nice thing about confidential transactions. The not so nice thing about confidential transactions is that these proofs are a little larger than normal Bitcoin transactions. So, each one of these outputs is something on the order of 2,500 bytes, which is much larger than you'd get for a Bitcoin transaction, but it is considered witness data. So if you're familiar with segregated witness, basically that data is used for signatures and other information, and that you only get charged 25% of the full cost of a byte there. So in the end, they are bigger. They do take up more space, but with Liquid we've got blocks every minute, and we've got the same block size limits as Bitcoin. So you actually have about as much capacity as Bitcoin. So it ends up working out pretty closely to Bitcoin. We have a 1 Satoshi per virtual byte fee on the main net. So it comes out about today's prices if you did a normal transaction, 10 to 20 cents US. So and the way transactions are on Bitcoin today, it's got a little bit more pricey. All right, so we're gonna jump into exercise number 2. The goal is to allow you to receive liquid Bitcoin. We're gonna see what it looks like when you're actually programming liquid, and see what it looks like when it's confidential and when it's not confidential. So I'm gonna go back to sharing my screen here. We're going to go back to the debug window here. And again, you can also follow along in here as well. All right, we're up. So one of the things you can do is you can get new address, and you get this very long address here. And this is a much longer address than you'd see in Bitcoin. And really what it is it's kind of 2 addresses in one. One is the normal address that you'd expect, and the other one is the address that you would see. So it's actually a blinding key. So it's a public blinding key that allows anyone sending you Bitcoin to encrypt the amount that they're sending you, so that only you would be able to know how much it was. Obviously, they would know because they sent you as well. All right, so one of the things I can do here is actually I'm going to take that address, call get address info. It actually gives me a lot of this information about it. So you can see here's the script pub key. There's the address of it as well. You can see it's different formats here as well. There's the pub key, there's the confidential key, the unconfidential address. So you're getting, basically there's the unconfidential address, there's a confidential key that would be used to embed this. Normally you're not ever thinking about any of this type of thing. It's just kind of happening in the background. But you can dig in here and see exactly what's going on. All right, so now what I'm going to do is I'm going to send to address. I'm going to send to the address up above, the full confidential address. I'm going to send myself 1.23 BTC. All right, and so we can see the transaction ID and my wallet. You can't see it on the other screen, but my wallet noticed it got a transaction that was sent out of it and also received one. So now we can call get transaction, and it's going to be this massive amount. Actually, I forgot one parameter here. I'm sorry, that's the right one. I'm jumping ahead here. Transaction has a big long hex. I mentioned that's a lot of information about the range proof. But what we can see here is, the amount. This is what it looks like to my wallet from my perspective. My wallet knows I didn't really lose anything. I just paid this fee as part of it because it knows it's sending it to itself. But if you want to see what other people would see, again, there's the big long hex of the address. I'm sorry, of the full transaction. And let's see here. So we could see the input was, it was spending some inputs that I already got. And these outputs, there's 2 outputs, and they each have this value minimum and value maximum. So we can see, we don't know what was sent. Somewhere in the range of 0 to 687 Bitcoin. And actually, we don't even know it's Bitcoin because we have this thing called an asset commitment. So it actually is hiding what assets even being sent. So I don't know if that's Bitcoin or not. I know probably one of them is because I'm paying a fee in Bitcoin, and that's the last output here where we actually see a real value. We're paying this, 36,000 Satoshi fee on this transaction here. All right, so there's a transaction. We can see that's in here. This is just for the general public seeing right there. So now we're going to do one more thing. I'm going to get the address info again, and I'm going to take the unconfidential address this time. I'm going to do send to address. I'm going to send to address the address, and I'm going to send 0.123 this time. All right. And now you can see, sorry, wrong command here. Let's dig in here. And you can see that the value of this output was actually visible to anyone because I sent it, I didn't blind the information because I sent it only to that non-confidential address. This other part down here is my change. So actually my change is still hidden. So even if my, I'm sending money to someone who has a public address, I'm still protecting myself with change. They have no idea how much Bitcoin I had ahead of time. They know I had more than 1 Satoshi and less than 687. Not really giving away too much information there. So that's pretty interesting that you can hide all that information. Anyone who's running a node is validating that these commitments are adding up and that they're non-zero. So we can validate. This is kind of two things that are very contrary a lot of times: privacy and also being able to validate something. So this is something that Liquid enables, as everyone can validate that it's all correct, that there's nothing created out of thin air, but they're also keeping all that information private from confidential from whoever they want to see, and they can share that with whoever they want. So if an auditor wanted to know, hey, prove to me you actually received this many Bitcoin, I want to make sure you're not lying to me, you could actually go and reveal these keys to your auditor. Your auditor could download a full node and import these keys and prove that you're doing exactly what you said you're doing. It's all locked into this blockchain with full proof of everything. So that's the the idea of sending and receiving confidential transactions. So I'm going to go back to the slides here. Hopefully everyone can start seeing the slides. And if you have any questions in here as well, we certainly can. I'm seeing a couple questions in here. One about non-fungible assets. I'm going to get to assets next, so I'll get to that one soon. A little bit about what the blinding factor is. Yeah, so I'm pretty sure. Again, this is we do have this published in a confidential transactions white paper. If you want to get really into the weeds, but basically it's a random number that can be used to hide information. So that's kind of the real short of it. Right, and I see a question about a Flask server. That's mainly if you're just going to a production environment for Flask. So I think that's for development purposes, you can just set it up with the default one. All right. So I mentioned I was going to go jump into assets, and I saw a question on this. All right, so this is, again, everything that I've talked about so far applies to assets. You can send assets to these addresses confidentially or publicly visible. But the other thing is anyone can create an asset in Liquid. And when you create an asset, you also have the option of revealing how much is created when you start it up, or you can keep it confidential. And again, confidential means you can still prove to someone at a later date that that's exactly how much it's worth. So maybe I'm creating 1 million shares in my company, and I don't want the general public to know how many shares there are, but I do want my investors to know. So I could use that blinding key and basically reveal what the amount of it is to all of my investors, and they know that there's only 100 shares of it. Whenever you send it, the quantities are validated, just like they were with existing transactions. And when you send the transactions, they're hidden. So I don't know if I'm sending Bitcoin or if I'm sending, let's just say, Allen coin. You also have the ability to create more of the same token, the same asset at a later point. So when you create an asset, you have the option of doing something saying it's reissuable or not. So if it's reissuable, that means that it's possible to create more. And you can define who's able to create more by creating a special transaction with spending. It's not really spending it so much, but more of signing like you would spend any kind of other transaction in Liquid. What's something called a reissuance token. And you can transfer these to other people, or you could have multi-signature requirements on these. Basically, you sign something that's equivalent to spending it to create more of the token. So this is kind of neat. Say you have a share of your company, and you have it tokenized on Liquid. And let's just say there's 1 million shares, and you decide to do a fundraising round, and you want to issue another 1 million shares of the company. You can do that, but you maybe want to make sure that only if the majority of your board members sign off on that you're able to create more shares. So what you could do is you could send that reissuance token, even if it was originally in a single wallet, single sig wallet. You could send it to a 3 of 5 address controlled by the Federation. So this is something that's I'm not Federation, but your board members in that case. So you have a lot of power to do this, and you could put some of them in different wallets, so they're backups, different criteria. Maybe you need all of them to sign off on it out of a hot wallet, but you need 3 of 5 if it's dug out of this cold storage bunker that's off buried in a deserted coal mine or something like that. All right. So, and then advanced creation. I don't think we're gonna get to this in the demo, but we have lots of examples on this. And the idea is you actually have the option to commit to some arbitrary set of values inside of the asset when you create it. And this allows you to do things like maybe you're doing something as a, we'll just say it's a bond coupon. And you're expecting payment back for this bond coupon, and it's redeemable at a certain date. You could write a whole contract. It could be a legal contract and hash it and stick that hash inside of the token. And you could prove to someone that when you wrote and created the asset, this whole legal construct was put into it. So that's something that's possible in here. And again, we can get to that with some of the APIs on this. And I think it's exercise time. All right, I saw there's another new question. The flow of custom issue asset for different participants in the ecosystem. Sure, that's exactly what we're going to do next. So happy to jump in on that. All right, so I'm going to go back to my debug window here. Again, this debug window is nice for just doing demos, but if you're doing this, you're probably going to write this code in some other language. You can use the RPC wrappers for this, and if you want to do it in a Flask, you can do it in Python Flask, you can do it in Node, you can do it in a C++ program, doesn't really matter. All right, so first step is I'm going to issue an asset, and you may see here I'm using decimals, and that's because everything's kind of in the API level is always treated at the whole Bitcoin level. But for an asset, it really makes sense to think about things at the Satoshi level. So in this case, we're issuing 100 tokens of this new asset, and we're also creating one reissuance token. And what we'll do is I'll create that, and it's generated. And I'm actually going to switch my window here, because this is actually, I'm actually not going to switch the window because I can just do it. I can call get balance, and you can see now I have inside of my wallet this asset that was created. You can see it matches asset 5B72, and it's now got 100 Satoshis of it. And I also have 0F80, which is the token or reissuance token. And basically, if anyone has access to this in their wallet, they're able to issue more of them at a later time. All right, so I'm going to do something very quick here. I'm going to start up. I'm going to restart my Liquid daemon here, and I'm going to put a label parameter in here as well. So let me find my terminal here. Oh, and I actually did one thing that was somewhat foolish, is I forgot to copy down those asset IDs. So let me copy those to a helpful spot. I'm going to put those up here in a browser so I have them. I'm going to go to my terminal, and you can actually add something in your configuration file called asset.dir, and you can add as many of these as you want. And you can basically define, and I'm going to share my screen just one second here. Asset.dir, I'll share it right now, might as well. You can see what I'm doing. A little more interesting than hearing me talk. Equals. Here's the first asset. And you can do this in your configuration file, or you can do it when you start up the application. It kind of is probably not recommended to do it this way, just simply because it's not going to retain it every time I start this up. Again, I could have put all these things in my configuration file. I'm not, just because I use Liquid mainnet all the time. So I just want to start it this way. All right, I'm starting it up, and I'm going to switch my screen here as well to my Liquid core or Elements core application. And you can now see, rather than seeing this big long text hex string of what it was, I actually now have a label with it that's actually useful. So if I want to go send it, I can actually see, I'm trying to send demo asset. Let's send one of these, or demo token. So I know exactly what I'm doing. So it's good to label as you go along. One of the things we are building too is an asset registry. So the idea is, you can prove that you created an asset. You can actually register those labels. We're going to have lots of interesting features like custom number of decimal places that your wallet will show up with, and like a ticker symbol for wallets that want to just display a ticker, and things like that. So those are some of the examples in there. All right, so let's go in here as well. Non-fungible assets, are they possible? Yes, you just basically create an asset of quantity 1 and just create lots of them. So that would make a non-fungible asset. So, it really doesn't necessarily know or care what they are. They're just basically a brand new asset every time. So that's going back to the other one. All right. Let's go in here as well. Actually, there's another good question. I'm going to just jump to it as well from Josh, asking about federated blockchain model. Some people have problems with it. Why is it different? Really, a lot of things. Liquid has a lot of strengths and weaknesses, and anyone who tries to tell you that there are no trade-offs in any type of solution, there's almost always some type of trade-off. So Bitcoin has a lot of advantages in the way it's set up. It's because it's mined. You have the ability for, there's no one in control of the network. Anyone can mine and add proof of work to something, and that has an economic incentive, but you're getting a less reliable network for that case. With Liquid, you're basically replacing the trust. Instead of that a miner is not going to be using economic incentives to double spend, but instead that the Federation will not double spend because they believe they're using the network and they don't want to harm the network. Now, one of the use cases for Liquid is for moving between exchanges. And a lot of exchanges today, and pretty much all of them, are they're custodial. They're holding your funds anyway. So the answer is, could the Federation spend the Bitcoin underneath? And that does require pretty large collusion, breaking into these machines of a large number of federations. And the answer is really, if I'm depositing money on, let's just say, an exchange, that exchange could technically walk away with my Bitcoin as well. In this case, it's now saying just instead of one bad actor or one hack from taking it, you now have 11 out of 15. So that's I would say it's an improvement over the exchange custody model. So putting Bitcoin into Liquid, I would put the kind of Bitcoin you would put into it that you would normally trade on an exchange. For assets, assets themselves are generally going to be pretty centralized. They come from an issuer. They have some promise from the issuer. There are digital collectibles that exist, and they exist on their own, and no one's actually redeeming them for anything. But if you had something like representing gold in a vault, or you had shares of a company, there's a central party that you can go to. So the fact that there is a little bit more centralization in Liquid, really you are trusting that issuer anyway. And in this case, the Federation itself, all they can do is spend all they can do is potentially show two different, allow a double spend. And in that case, you have proof that they didn't do what they're supposed to be doing, because you have two tips of a blockchain that diverge at some point. And you can basically, the issuer can go and say, oh well, look, the Federation did something they weren't supposed to. We know this happened at this point. We're going to honor this, stock ownership at this point in time. So, there's basically, when things are centralized, you can take advantage of that centralization. And when things are decentralized, there's different solutions and different trade-offs. So that's kind of the answer of federated versus not. You do get a lot of advantages of finality at two confirmations in Liquid where you wouldn't get with any type of mined blockchain. All right, so I'm going to jump back to the slides here. What language to combine Liquid assets with legal contract? So there's not actually any enforcement on that. It's all, based on the issuer themselves. So basically, you commit to the hash, and that goes in. Do we have that exercise in there? It might be in the advanced issuance. It might not be in here. We'll have that up in an example very soon. I know a lot of the documentation team's been working on this. So, and the other question Luigi asked is, Liquid is the general idea and Elements is the tooling built on Liquid. It's kind of the opposite. So Elements is a general purpose blockchain, and Liquid is an example network, example side chain that happens to use Elements underneath of it. So you can create an Elements federation that is not Liquid, but Liquid happens to use Elements. All right, so I'm going to jump back in here as well. And so there's an error with my link. It looks like Daniel's fixed it as well. All right, I'm going to go back to the slides. And I think there's more exercises coming up. All right, reissuing an asset. So I mentioned that. We want to talk about how you can reissue an asset. I'm going to go back to my screen here so you can see it. I'm going to open up my debug window because that's what you want to see. All right, so you can see it here. And again, remember when we do get balance, hey, look, we have demo token and demo asset labels showing up just like we thought. All right, so now what we can do is we can actually reissue the asset. So reissue asset, demo asset, 0.1234569. All right, so I issued 99 Satoshis more of it, and we can actually see my balance here. I now have 199 of this demo asset. So that's pretty easy to see here. We can also call list issuances here. So this is going to see a list of all the issuances of assets. You can see here's an issuance. It wasn't a reissuance, and then the second one is the reissuance. And we can also see this is kind of counts as an issuance is when we got the 10 free Bitcoin at the beginning. That's kind of a little special one that's just for this test net. All right, so I also want to see the transaction to kind of look at what it looks like. Here's the TXID. So I can go and say get raw transaction. Cool. There's all that commitment information in here, the whole hex of the transaction. Basically committing what we have here. And we can see, again, the output amounts. We have no idea what they are. The asset commitment, we have no idea what asset this is. The only way I'm able to know this is because it's in my wallet. So that's kind of the advantage you have here. And again, there's the other one. Some of this is Bitcoin. Some of this is my asset. Some of it's the reissuance token. I really don't know what's going on here other than it validates correctly. So that's the advantage here. All right, so the next one is being able to send the asset. So I'm going to get an address again. All right, here's my address. I'm going to send to address. All right, I'm going to send myself 3 Satoshis. I'm also going to have to pass a couple extra parameters because when I had sent to address before, just assume it was Bitcoin. When it's a different asset, I need to always have the last parameter set to the asset. And that means I need to fill in everything else that's optional. So that's just kind of an extra step here. Those are the default values. All right, so there's my sending to an address. I can see it here. And what I can do is see this here. There's the transaction again, lots of hex at the end. And we can see, again, value, amount, all that hidden. I can also look, sorry. I need to do one more thing to make that work. It's waiting for all that stuff to confirm. So I finally just created a block. There we go. So I can see each address that I've used. There's my demo asset I just sent myself. Three demo assets in it. I can look at these other addresses. There's where my token went to. It went to an address that just happened to be in my wallet. There's the amount that the initial issuance went to. So I can see all these history of things as well. All right, so I'm going to go back to the slides. We've got about 10 minutes left. We did that exercise already as well. One thing I did want to talk about, and we don't have a demo on this, but it's actually should be ready very soon. I'm hoping this week, of a tool that actually lets you do this. So because Liquid has assets at the native protocol level, it's at the consensus level. All the blocks know what an asset is, and this is different than a lot of chains like even Ethereum. So Ethereum has the understanding of all of the Solidity and smart contracting, but it doesn't know what an asset is. So anyone who's trying to receive an asset, they actually need to get an ERC20 compatible wallet to really kind of interface with this. But Liquid does this all at the native level, and so this lets you do some really cool things without even needing to build a smart contract. So in this example, I've got Alice and Bob. Alice has an input in her wallet of 10 Liquid Bitcoin. And Bob has one in his wallet that has 200,000 grams of silver. And basically, he got that asset from someone who operates a silver vault. And whenever someone deposits silver in there, he gives them one of these tokens for it, for each gram. And whenever someone wants to withdraw silver, they basically will send that back to the vault and can go redeem it for silver. But this lets them trade the asset without necessarily needing to move it out of the vault. And as long as everyone trusts that the guy running the vault is actually going to redeem the token, all's well and good. All right, so we have here, and let's just say Alice wants to acquire 180,000 grams of silver, and she's willing to pay, say, 60,000 grams per Bitcoin is the price she wants to go for. So they can actually use this is one transaction here. And Alice adds an input to it. Bob adds an input to it. Alice adds outputs of it for her wallet, which is 7 BTC change, along with the 180 grams of liquid silver she wants. And then Bob wants 3 liquid Bitcoin in his output and 20,000 grams of silver. One thing that's also really cool about this is when they do this transaction, Bob doesn't even need to know that she has 10 LBTC. She could have 1,000 LBTC, and it would all work the same. And the only thing he sees is this commitment to 3. And he just assumes that whatever's left over is change. And the same thing happens with the silver. Alice doesn't even need to know how much silver Bob has. And again, that kind of information, it can potentially be used against you if you're trading. If someone knows you have a lot of, your landlord knows you have a lot of Bitcoin when you pay your rent, they might be more likely to raise the price of your rent. So this transaction goes through or it doesn't go through. And there's no custodian that is needed to hold the liquid Bitcoin or the liquid silver to do this trade. And it's going to be a fair trade where it's either going to happen or it's not going to be included in the blockchain at all. And the reason it wouldn't be included in the blockchain is, let's just say Alice, didn't, changed her mind, or Bob took too long to sign the transaction. She could spend this liquid Bitcoin, send it back to herself. So this is something that's one of the interesting use cases of Liquid. You can do a lot of things with non-custodial exchanges where you have these partially created limit orders, and the exchanges could actually never touch your Bitcoin and just pair you up with someone else who is trading. All right, so I think that's it for the planned time. We had a couple of extra sections, which I didn't think we'd get to, and it looks like the timing worked out. I'm just going to go look through here as well to just see the questions in here that got in here. The reissuance be disabled? Yes, the reissuance can always be disabled on any asset. So when I call issue asset, there's a parameter that says, do I want to make this public? And there's a parameter that says, do I want to be able to reissue it? Actually, I just create 0 reissuance tokens. That means no one's ever able to create more. So that's how you can do the non-fungible asset. Assets could be exchanged for liquid Bitcoin and eventually Bitcoin. Sure. So you could absolutely trade those assets with anyone who's willing to trade them for you, and that's something that we think will be very interesting with Liquid, because you don't necessarily need to have a central custodian to do these trades. Our Liquid and Lightning hackathons the same thing. No, they're different competitions. So one's focused on Lightning Network and one is focused for Liquid. And the tutorial for Atomic Swap soon. I'm really hoping we have like one more code change to make to it, and it's got a command line tool and a GUI for doing it. So yeah, let me see if we can get that published this week. If anyone wants to use that for their part of the hackathon, it would be probably really interesting. The dog food installation. So yeah, it's going to depend on your OS. You're going to install it a little bit differently or build it from that source. So if you go to the Slack, that's for the code for the hackathon, we have quite a few mentors able to help answer specific questions on that. The Atomic Swaps to be online, kind of. So, the swap can happen. You do need both participants to communicate with each other to do this. There are ways to do it. It's a little tricky, but you can do it with sig hash single, where you have one input and it commits to another output, and you just send that to someone, and you don't have to be online to have them sign it or not. So that is possible. It's a little harder with sig hash single. You basically need to spend all of your output. So if you want to do that, you need to basically create an output that's the exact right size of what you care about, and then send that to someone. So that's our interactive one doesn't assume that. We just wanted to make it more likely to work. But you could also, if you want to create it offline, maybe you want to maybe you have a hardware wallet or something, and you want to sign a transaction and commit to it, and you go to sleep, and then let someone match it while you're sleeping. You could certainly do that. It is possible. And let me see, interest out there for asset issuance. Yeah, so we issued the Liquid Securities tool. There's a lot of interest here. Stable coins are another big one. So Tether is one that will probably be the first stable coin that's on Liquid. Their CTO has been posting on Twitter about it. So that will be one that will be interesting. There's a lot of interest in securities, particularly in real estate. That's kind of one area that's kind of hot for tokenizing assets. So that's, we see multiple parties interested in that. Some of the things that we didn't really cover about this in securities is kind of the idea that you need to enforce a lot of rules about who can hold a token, and don't have a lot of time to kind of dive into that, but we do have that on the Liquid website on the securities tab. Use cases limited to exchanges and institutions, anything for individuals. So yeah, any individual can connect and connect to the Liquid blockchain. You can issue assets, you can send assets, you can peg in Bitcoin even. The one thing you cannot do is you cannot peg out Bitcoin right now. And we're researching ways to do that safely, maybe with a delayed peg out, but it's a security concern is why that's the case. Basically, these Liquid wallets are hot wallets, so we want to make sure that they only will sign transactions that are going to locations that they are aware of, so that just in case, the unlikely event that 11 out of 15 of these functionaries are compromised, that the worst thing that someone could do is just send Bitcoin to someone who's already in the network and we know who it is and can get it resolved. But that's, again, very unlikely and just kind of the most paranoid use case. And let me see if there's any other questions in the main chat. I don't see anything in here. And Daniel or Neil, did I miss anything else?
Just one thing that I wanted to clarify, the Liquid and the Lightning hacks are definitely different. They have different prizes, different judges. So when you're submitting your project, make sure that you indicate which hack you're submitting it for. I do believe it's possible to submit for more than one hack at the same time, if your project uses Liquid and Lightning, for example. So that's maybe something you want to bear in mind. But certainly they're two separate competitions with different prizes, and you need to indicate at the time of submission which one your project's for.
And the question is, how do you build a tool that has multiple users transact assets? Yeah, so the way we do this right now is, you could do a wallet that does this, but basically tool that we're building, and again, I'm hoping we can get this out this week, creates a partial transaction and serializes it. And you can like send it to someone over any type of, text messenger, or you could build that into your application. So you can basically build a chat server for trading if you wanted to. That would be one way to do that. The last question I see here, and I think we're going to run out of time, is about Mimblewimble and how we could use that to augment Liquid. I don't think there's any specific plans on Mimblewimble right now. You could do it as a sidechain as well. It's not. I don't think there's any active plans right now on that. But stay tuned. Things can always change. Let's see right here. I think that might just be about it then. I appreciate everyone attending, and if you have any questions, there's a Slack that is specifically for the hackathon. Feel free to come to any of our channels as well. We have an Elements channel in a Bitcoin Core community Slack, and a lot of active members from Blockstream there to help out. And we'll be happy to answer any questions, and look forward to anyone participating in the hackathon. Look forward to helping you, and I'm sure the judges will look forward to seeing what you create. Thanks.
Yeah, we're very excited to see those submissions. And just somebody's just asked the question if this recording will be made available. It will be. We'll be publishing it on YouTube very soon. Thanks a lot, guys, and catch you later.